to 1.5. You might not want to wait for it to get back to $2. You walk away with the 1.8. Do you get me? Or let's assume you didn't walk away at 1.8 and you don't see it at 1.6. There is this fear that comes in. You're like, this thing might drop back to $1. You sell at 1.5. Now, all those activities, those actions, is what we call sellers asking to sell. And the more you are reducing the price you want to sell, do you get what I'm saying? You'd have sold at $2. For some reason, you now said, okay, even if you don't touch $2, I could do 1.8. If he doesn't want to touch 1.8, as they keep bidding the prices, as they keep asking for lower prices, the price of the assets will drop. Do you get what I'm saying? Yes, the price will go down. And sometimes buyers will feel that price is too expensive. That's what we call overbought scenario. That price is too expensive for me to buy. I rather wait. So demand automatically will reduce. Do you get it? The demand reduces. The ones that have are selling because they can see it's going down. And that's what we mean when we say market is bearish. You expect price to decrease. Do you understand that? Now, if you understand every formula that has to do with supply and demand, or demand and supply, then spot market is where you should be, because it's straightforward, it's easy to use, and you just know where you're headed to. You know that, okay, I got this asset at $2 and then the price dropped to $1. It's only going to take, remember what I told you earlier, nothing stands alone. Do you get me? For you to have black, you should have white. So as long as you've done your analysis right, you understand what this project is about, right? You understand the solution it's providing, the problem it's solving. You've done all those research, right? And then you were getting to a point where you'll be able to do your technical analysis. You use your technical tools and check. Then you go in, you buy. You know the quantity. Remember, I always tell you the quantity you have remains that way except you add to it. What fluctuates is the value. And as long as you didn't enter that particular trade by chance or carelessly, you did your research. That's what we mean by DYOR, right? Do your own research. You're sure you did your research before getting into that asset. It could linger, but you know you have a target price. And over time, it gets to a point where nobody wants to sell anymore. You find out that demand, the price is now cheaper, isn't it? Are you getting me? $2, it kept going down to $1. Then people are looking at it, this thing is extremely cheap. Someone is looking for 10 million to go in. Someone is looking for 1 million. That buying pressure increases immediately and the price starts shooting up again. Then it's back to $2. Before you know it, some people are like, hi, I missed this thing at so price. It's back to $2. It's like it's going higher. FOMO, that's FOMO. Fear of missing out. I don't want to miss. And then before you know it, the whole FOMO brings in more buying pressure, and the price can go way up as $3 or $4. Do you get it? Now, spot market is straightforward. Relate with it the same way you relate with your regular businesses. So you are stocking up cartons of peak milk in a warehouse. You know the cost of each peak milk. You know the total money that left your pocket. You know the quantity of peak milk you got, right? And you have it there. Now the price of peak milk rather has gone up. You can easily start selling, knowing that you got this peak milk at anybody who got peak milk earlier this year, selling now, as long as it doesn't expire, selling right now, you're in profit. True or false? Sure. So I want you to look at spot market in that light. Anytime it's as though you are not getting it, or you're a bit confused or something, remember this illustration I gave with peak milk, relating it to spot market. So spot market is usually very recommendable for beginners. You stay here, you build your portfolio until it gets to a point where you can afford to lose some. So that's where you might want to go to futures to take a higher risk or bigger risk. But this is a comfortable risk to take. Do you get that? Good. So spot market, we're using Binance right now. We're going to go to your Binance and I'm going to show you around the spot market. But before I do, I want the admins to share anything they have on spot market. What has your experience been like trading in the spot market? We want to hear from you, I want to hear from you, and we'll hear from Coach Sonny as well. So let's share our spot experience. For me personally, on sports market, I made my first $10,000, $20,000 from this sports market. It could be very slow and discouraging sometimes, but once you have that long-term mentality, knowing that trading is not a get-rich-quick scheme, rather is a get-rich-slow scheme. If you have that investing mentality, you come into the spot market, pick some good assets across the different sectors. Do you get? Like, have your portfolio balanced. You're not buying assets from one particular zone. Remember, I told you something about zones or categories. We have coins or assets that fall under education, the ones that fall under AI. So as long as you diversify your funds across these sectors, do you get what I'm saying? When the market starts moving, even if all the sectors are not moving at the same time, you are good to go. There might be delays. Remember, it's usually not a straight line. There is no rule anywhere that states that once you invest into an asset, the price should just shoot up. Bitcoin has been going up since its existence, but it didn't happen in one day. We had the hurdles. There were hassles in between. There were times it got to 20, came back to 3,000. Do you get it? So if you have that mindset as a beginner in the sports market, trust you me, you will get your portfolio to a point where you can now play around with money on other aspects of trading. But for now, at this beginning level, stay here, balance your portfolio, build it to a point you can at least take out your capital, see some reasonable profits that will be worth your time, and then have some spare profit to keep trading, because it's a business for us, isn't it? We have that business mindset or mentality, and we'll keep trading. And then you have the ones you take out to execute other plans or other businesses you're building. So that has been my spot market experience. It's safe. It's safe. Market could go down, stay down for a while, but I know one thing for sure. As long as nothing stands alone, we have the going down. We will definitely have the one going up. So the best thing to do is, you're coming in at the right time. Market is like, we've been going down for some months now. So if you're able to catch the bottom, or maybe somewhere just before the bottom, no one actually knows the actual bottom, but you can know the bottom zone or area. If you're able to get in there halfway up, you're good to go. So my spot experience has been cool. I don't regret it anyway. I'm happy, and I'm still 90% of my funds are here. 10% I can use for futures or any other type of trading, and the more I make from there, I put them into spot, spend from there as well. Do you get what I'm saying? But your focus right now is here, especially because we're approaching the bull run. After the bull run, we have enough time for you to play around with some spare money on futures. Market will be going down, then we'll go to futures and see how we can short the market. Do you get what I'm saying? So sport is a go-go, you're on track, you're doing the right thing. So I don't know, what do you have to say about sports? You have the stage now.